Welcome to the Imperium Forex Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday the RBA released its minutes and highlighted that a further rise in the Australian dollar may lead to slower growth and lower inflation. Also, the report said that house prices and household debt warranted careful monitoring. The GDP growth is likely to pick up in the Q2, with the economy expected to grow around 3% for 2018 to 2019. Looking ahead today, the data release will be looking at the wage price index for Q2. The forecast is at 0.5%. It will be closely watched for any increase. So overnight, the Australian dollar has remained relatively weak as the greenback strengthens slowly. With the help of the US advance from an upbeat retail sales report, which came in at 0.6%, with the forecast being at 0.3%, has helped the US dollar and in terms weakened the Australian dollar, and now looking towards 77.55.70 as a potential near-term target. However, do look at the RSI. It is showing some divergence, and we could in the short term see a small rebound. However, resistance comes in at 78.55 and above there and towards 79.05.15 I now view as a supply zone and should expect further weakness to emerge above 55. With the uptrend now broken overnight at 117.05.15 due to the fact of a stronger US dollar, is the downside potential holds now to 116.25.35 with a cap seen at 117.80 figure. If the dollar index can keep on its track to the bullish target of 95 on the index, and it's currently trading at around 93 handle at the moment, is that we could be looking at euro lower towards the 115.10.20 area. But still keeping a close watch to these technicals does support further weakness. Now tonight we have the release of the minutes from the Federal Reserve latest policy meeting. Investors will be looking for more hints on the timing of the next US rate hike and clues on how the central bank plans to trim back its balance sheet. Alongside this, we also have the release of the ECB monetary policy meeting accounts, so do keep a close watch on that tonight. The dollar yen story has strengthened and continued overnight, with the market taking out the resistance of recently at 109.75, now challenges the level of the objective, should I say, at 110.50. In light of the pattern and just given a further confirmation of a further bull move, we could see the rally on towards 111.05.15 today and reassess from there. A break above there, however, would give further concerns to a weaker yen and could see the rally on towards 112. Looking to the downside, any pullback should now find support from 110.20 and firmer from 109.75.80. The British pound continues to be on the negative path since the release overnight of the UK CPI. The forecast was at 2.7 but actually came in at 2.6. There is also concerns that the renewed Brexit jitters, with the latest reports from UK Brexit Minister David Davis, who said that the Brexit transition period must conclude by next UK election. He said it's too hard to say how long the transition will be, but most likely to 2 years. Further concerns from the divorce bill, looks like there'll be a little number to view as the market looks towards October. So with the technical implications, as you can see here, still remain negative, with the ADX still holding a trend, we could see a move beneath 128.35 now. This would give an extension to the downside to 127.05.15. Any advances on the day should find a good supply, and the market likely to start establishing short positions above 128.90 with a cap seen at 129.60.65. The gold overnight ended on a very volatile trading session as the market plummeted towards a low around this morning of 66. Now what is concerning is the fact that the technical implications are still remaining to the negative side. Therefore, if this pattern continues, we could see a break beneath 66 would give further bearish implications and target 59 or even as low as 1,251 to 52. As I mentioned, the technicals are on the concerning side, but as you can see, this uptrend is holding at 66, and if we do get a rebound from there, then a break of 74 will give us scope towards 79 or even up towards 86. Oil still remaining negative, and I still look for a target of $46.70 and reassess from there. Any advantage should still find good supply from $48.60-65, with the technical implications still remaining weak, supports this view. Well, since the rejection from that $17.20 area, plus the long-legged doji, the market has displayed very concerning bearish view that we may continue if we break beneath 50. But that being said, let's see how the market plays out. There is a little bit of momentum coming back into gold, so we could see the market rebound from this 50 level and look back towards a resistance of 85. Now a break above there would give further scope up towards 17.0520, which could again draw fresh supply. Beneath $16.15 looks firmer from this support that I've highlighted here around $16.1520, but the technical implications are concerning. So we may see, for the start of the day, pressure on this level of 50 and see how it plays out in the next 24 hours and see if it can hold. That wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead of us.